I'm Matt Bouchard with REIT.com here in New York City for REITWeek 2014. Joining me is Michael Happel, President of New York REIT. Michael, thanks so much for joining us.
Thank you for having me.
Now, New York REIT began as a public non-listed REIT prior to its IPO in April. Can you talk a little bit about the market response and what you've seen so far?
Yeah, the market response has been fantastic. In fact, our stock hit an all-time high yesterday. Now, we've only been listed since April 15th. But big picture, there were two purposes of our listing. First, it was to provide liquidity to our existing shareholders, and we've fulfilled that objective. So it's an important milestone from that perspective. The second purpose, though, really is to provide long-term access to public market debt and equity to help grow this company. And on that front, we're just beginning. I like to say this is maybe the end of chapter 1 for some of our shareholders, but it's really the beginning of chapter 2 for the company.
Now, your company is obviously very clear about its geographic focus. Here we are in your backyard. What are some of the advantages and possible disadvantages of having that type of narrow focus?
Yeah, you're right. We are 100% focused on New York City, and we will stay 100% focused on New York City. If I can say, lightly speaking, it's hard to go wrong buying real estate on an island. So that's one way to think about it. But on a more serious note, look, I think that Manhattan and New York City overall is arguably one of the best real estate markets in the world long term. So we're glad to be focused on this market. Having said that, if we get in a down cycle in New York City, we will be impacted when and if that happens. But long term, it's a supply-constrained market. It's a market with a lot of rent growth potential and a market with a lot of appreciation potential. So we are going to remain as a pure play on New York City.
And lastly, even though as you mentioned, you have a narrow geographic focus, within that you vary by asset type. Can you talk about your outlook for the various property sectors that you invest in?
Yeah, I think our primary focus is on office and retail in Manhattan. And right now about 80% of our portfolio is office in Manhattan, and another 10% of the portfolio is retail in Manhattan. So I'll focus on those two categories. In terms of office, we're still, number one, able to buy below replacement cost, which is a buy signal to me. Number two, we're buying at yields that are higher than our borrowing costs, so we've got a nice positive spread. That's another buying signal to me. And third, we're buying at a time when rents are still well below their previous peaks. Office rents declined roughly 25% after the 2009 recession, but they're still down roughly 17% from their peak. So we're beginning to see rent growth, but I think, assuming the world doesn't fall apart around us, we're going to have several years of very strong rent growth in the office sector in New York. Retail is already seeing strong rent growth. Retail is being partly fueled by the boom in tourism that we're seeing in New York City. As you probably know, we had record tourism last year with over 55 million visitors to the city. So I would say the retail recovery is ahead of office at the moment, but both office and retail, I think, have a significant rent growth opportunity ahead of them.
Michael, thank you so much for joining us today.
Thank you.
For more on this and other REIT news and analysis, be sure to visit REIT.com.